My brother forged papers to steal our family's funeral home. 6 months after our father died, I discovered that my brother had forged a partnership dissolution agreement, quietly bought out my supposed half of our family's funeral home for a fraction of its actual value, and had spent those 6 months systematically overcharging grieving families in ways that violated state consumer protection law in at least a dozen documented instances. I have a specific memory of standing beside our father in the funeral home's small office when I was maybe 16, watching him quietly waive most of the cost for a family who'd just lost a young father to a workplace accident, a family with barely enough savings to cover even the most modest arrangement. He didn't make a show of it, didn't ask them to feel grateful or indebted, just adjusted the invoice matter-of-factly and told them to focus on their children rather than the bill. Afterward, once the family had left, he told me that a business could survive on modest, honest profit made from families who could pay in full, as long as it occasionally extended real grace to families who couldn't, and that the moment a funeral home started treating every family as a maximum extraction opportunity rather than a person in crisis, it had stopped being the kind of business worth running at all, whatever the balance sheet eventually said about it. Our father, Osric, opened Hallow & Sons Funeral Home nearly 40 years ago, a small family-run operation in the same town where he'd grown up, built on a specific old-fashioned philosophy he repeated often enough over the decades that both my brother and I could probably recite it word for word, that a funeral home's job wasn't to maximize profit off people at the worst moment of their lives, it was to handle death with the same care and dignity you'd want for your own family, and that a business built on that principle would always find enough customers to survive, even if it never made anyone rich. He kept his prices deliberately modest compared to the larger corporate-owned funeral homes that had opened in neighboring towns over the years, offered payment plans to families who couldn't afford the full cost up front, and built, over 4 decades, a genuinely trusted reputation in a community that valued exactly the kind of quiet, honest service he'd made his entire professional identity. My brother Callahan and I both grew up working at the funeral home in various capacities as we got older, the way children of small family businesses often do, and we both eventually joined our father professionally as licensed funeral directors ourselves, though our relationships to the business, and to the specific philosophy underlying it, diverged considerably over the years in ways that only became fully clear to me after our father's death. Callahan had grown increasingly frustrated in the years before our father died, watching the business's modest, principled pricing struggle to compete financially with the larger corporate operations that had none of the same ethical constraints, frustration he expressed more than once at family gatherings, arguing that our father's old-fashioned philosophy was, in his words, a beautiful way to run a business into the ground. Our father's will, drafted with an attorney nearly 8 years before he died, left the funeral home jointly to Callahan and me as equal partners, with a specific, carefully worded provision requiring both our signed consent for any major structural change to the business, a sale, a dissolution of the partnership, any fundamental shift in ownership structure, a safeguard his attorney later told me our father had insisted on specifically because he'd sensed, even then, that Callahan and I might eventually disagree about the business's direction in ways that could threaten the principled operation he'd spent his life building. Our father died of a heart attack in early winter, quickly and without much warning, at the funeral home itself, in his own office, working late on paperwork the way he often did. Callahan and I grieved together in the months that followed, or at least I believed we were grieving together. We coordinated the practical logistics of taking over daily operations, split responsibilities the way we always had, and discussed loosely the future direction of a business we'd both now inherited jointly. I want to be honest about something that matters to understanding what happened. I trusted Callahan completely during those months, the way you trust a brother you've worked alongside your entire adult life, someone who'd spoken with real feeling at our father's own funeral about the specific values our father had spent decades instilling in both of us. It was 6 months after the funeral when a former colleague who'd left the business years earlier reached out to me with a strange, unsettling question that everything I'd believed about those 6 months began to unravel. Odalie explained, once I asked how she'd even heard something like that a mutual acquaintance had mentioned, entirely in passing at a community event, some paperwork issue involving the funeral home's insurance that had required confirming Callahan's sole ownership status with an insurance adjuster, a detail so administratively mundane that the acquaintance hadn't thought twice about repeating it, but that had stuck with Odalie, who still remembered our father's will clearly enough to know that phrase didn't match what she understood to be true. The former colleague, a woman named Odalie Ferran, who'd worked as our father's office manager for over a decade before leaving to raise her own family a few years before he died, still stayed loosely in touch with the community through mutual friends and former clients. She called me one evening, hesitant in a way that immediately put me on alert, and asked whether I'd known that ownership of the funeral home had apparently changed, according to something a mutual acquaintance had mentioned in passing, to reflect Callahan as sole proprietor, rather than the joint partnership she remembered from our father's will. I told her that wasn't possible, that our father's will required both our consent for any change to the ownership structure, that nothing like that had happened, that she must have misunderstood something secondhand. But the specific, nagging discomfort of her question stayed with me after we hung up, and that same same night, unable to shake it, I pulled up the county's business registration database myself and searched for our funeral home's filing. What I found made my stomach drop through the floor. The business registration had indeed been updated roughly 4 months earlier to reflect Callahan as sole owner, based on a filed partnership dissolution agreement that purportedly bore my signature, dated and notarized, dissolving the original joint partnership our father's will had established, and transferring my entire ownership interest to Callahan in exchange for a stated buyout amount of $40,000. I had never signed any such document. I had never received any buyout payment, $40,000 or otherwise. I had never once discussed dissolving our partnership with Callahan, let alone agreed to sell my half of a business our father had spent 40 years building for what I already understood, even without a formal appraisal, was almost certainly a small fraction of its actual value. I called Callahan immediately, my voice shaking, and asked him to explain what I was looking at. There was a pause on the line, longer than felt natural, before he answered. He explained, in a careful, measured tone I'd never heard him use with me before, that he'd handled some administrative restructuring of the business's ownership a few months earlier, that he'd intended to discuss it with me properly once things settled down but had gotten caught up in the demands of running the business day to day and simply hadn't gotten around to it yet, that he was confident. Once he explained his reasoning, I'd understand why the change made practical business sense. I asked him directly whether he'd signed my name on that dissolution agreement himself. He was quiet for a long moment before admitting, in a voice that had lost some of its careful composure, that he had, explaining that he'd been confident I would have agreed to the arrangement if he'd asked me formally, that the $40,000 figure represented what he genuinely believed was a fair valuation of my share given the business's struggling financial position, and that he'd simply moved forward with the paperwork to avoid what he described as unnecessary delay during an already difficult transitional period. I didn't fully believe that explanation even as he was delivering it, mostly because of a detail that kept nagging at me the entire time he spoke. The funeral home, as far as I understood from years of working alongside our father, had never been in the kind of struggling financial position Callahan's $40,000 valuation would have suggested. Our father had always kept the business modestly but stably profitable, and I had no reason, going into that phone call, to believe anything had fundamentally changed in the 6 months since his death. The weeks that followed were a slow, sickening unraveling of things I'd taken entirely on faith for 6 months without ever examining closely. I requested access to the business's complete financial records, going back through the entire period since our father's death, and found myself met with a series of delays from Callahan. Records were with the accountant, some systems were still being reorganized after the ownership transition. He'd get everything compiled for me soon. Each delay, stacked week after week, began to feel less like ordinary administrative slowness, and more like something closer to stalling. I reached out to our father's longtime accountant directly, a careful, precise man named Grantham Osei, who'd handled the funeral home's books for nearly 15 years, and asked him to walk me through the business's actual financial performance over the 6 months since our father's death. What he described bore almost no resemblance to the struggling financial picture Callahan had used to justify his $40,000 valuation. Revenue, if anything, had increased slightly in the months since our father's death, a detail Grantham mentioned somewhat uncomfortably, adding that he'd noticed the increase came primarily from higher per-service billing, rather than any meaningful growth in the actual number of families the funeral home served. One of those conversations with a family named the Okonkwo's, who'd lost their grandmother during the 3rd month after our father's death, stayed with me particularly vividly. The son, a soft-spoken man in his 40s, described sitting across from Callahan in the same consultation room our father used to use, feeling a specific, disorienting pressure he couldn't quite name at the time, a sense that certain more expensive options were being presented as though they were simply standard rather than optional, that questioning the pricing felt, somehow, like it would reflect poorly on how much he'd loved his grandmother. He told me he'd paid the final invoice without fully understanding half of what was on it, trusting the name on the building the same way his own family had trusted it for 2 generations. That detail sat with me for days, turning over exactly what it might mean. I started making a point of talking, carefully and discreetly, to a handful of families in the community who'd used the funeral home's services during the months since our father's death, people I'd known for years through the business, people who trusted me enough to speak candidly about their experience. What several of them described troubled me deeply: itemized charges for services and merchandise that seemed considerably higher than what they remembered our father charging for similar arrangements in years past. Pressure during the vulnerable, exhausted process of planning a loved one's funeral to select higher-cost casket and service options than they'd initially indicated interest in, and, in a few specific cases, confusion about exactly what they'd been charged for at all since the ASI. Itemized statements they'd received seemed, on closer inspection, notably vaguer than what I remembered our father always insisting on providing. I brought what I'd learned to a family friend who worked in consumer protection law, a precise, formidable woman named Cordelia Ashgrove, initially just to ask general questions about whether what I was hearing sounded like a genuine legal concern or simply my own suspicion running ahead of the evidence. Cordelia listened carefully and told me something that reframed the entire situation for me. Funeral homes, she explained, operate under under specific federal and state consumer protection regulations, precisely because grieving families are recognized as an unusually vulnerable population, susceptible to exactly the kind of pressured upselling and unclear pricing several of the families I'd spoken with had described. The Federal Trade Commission's funeral rule required itemized, written price disclosures for every product and service offered, prohibited certain kinds of pressured bundling, and gave families specific, legally protected rights that, based on what I was describing, our own family's business appeared to be violating in ways that went well beyond simple bad business judgment. I met Cordelia for the first time in her small downtown office, bringing with me a folder that felt embarrassingly thin at the time, the printed business registration showing the ownership change, my own notes from the phone call with Callahan, and a handful of names of families who'd mentioned feeling uneasy about their bills. She read through all of it carefully, asked precise, methodical questions, and told me near the end of that first meeting that thin folders like mine sometimes turned into the most significant cases she handled, precisely because a single verifiable thread, in this case the forged signature on a legally required consent document, tended to unravel considerably more once you started pulling on it properly. Cordelia's first move was formally requesting, on my behalf as the legally recognized co-owner given the fraudulent nature of the dissolution agreement, the funeral home's complete billing records for the 6 months since our father's death, alongside the original consent forms and itemized price disclosures the funeral rule required for every family served during that period. Callahan's attorney, once formally engaged, initially resisted producing the complete records, citing ordinary business confidentiality concerns, a resistance Cordelia noted was itself telling given how straightforward a legitimate business's compliance documentation should have been to produce. While that records request worked its way through formal channels, Cordelia brought in a forensic document examiner named Basil Renner to formally compare the signature on the fraudulent dissolution agreement against verified authentic samples of my own signature pulled from other legal documents I'd signed over the years, my own mortgage, several years of tax filings, my original funeral director's license application. Basil's analysis, delivered 2 weeks later in a formal report thick with careful hedged technical language, found consistent, meaningful discrepancies between the forged signature and my authentic samples, concluding that the signature on the dissolution agreement had almost certainly been produced by someone other than me. Once the complete billing records were finally produced, roughly a month into the formal dispute process, Cordelia brought in a specialist in funeral industry consumer protection compliance, a meticulous woman named Perpetua Achebe, who'd spent years working with state funeral licensing boards, specifically on exactly this kind of pricing and disclosure violation case. Perpetua's review of the 6 months of billing records, cross-referenced against the funeral rule's specific disclosure and pricing requirements, documented a pattern considerably more extensive and more troubling than even my own informal conversations with families had suggested. What I'm seeing here isn't occasional borderline noncompliance, Perpetua told me, laying stacks of billing records across a conference table. This is systematic. Across the 6 months of records I've reviewed, I've identified at least 14 instances where families weren't provided the itemized general price list the funeral rule requires before any discussion of specific services began. I've identified at least a dozen instances of what looks like deliberate bundling of higher-cost merchandise with standard service packages in ways designed to obscure the actual cost of individual items families were entitled to decline. And in at least 6 cases, based on the documentation available, families appear to have been charged for services or merchandise categories that don't match what the actual funeral arrangements described in the file suggest they received at all. I asked her what that last category specifically meant, my stomach already tightening in anticipation of an answer I suspected would be worse than anything she'd told me so far, since it sounded, even in her careful professional phrasing, like something considerably more serious than aggressive but technically legal upselling. She was quiet for a moment before answering directly. In plain terms, it looks like at least some families may have been billed for services or products they never actually received, or billed at rates significantly inflated above what the general price list on file would have disclosed had it actually been provided to them as required. That's not just a funeral rule compliance issue at that point. Depending on how a state attorney general's Consumer Protection Division chooses to characterize it, that could constitute outright fraud. Perpetua mentioned to me, near the end of one of our review sessions, that something about the specific sophistication of the billing manipulation, the careful bundling, the subtle vagueness in disclosure language that stayed just technical enough to seem defensible on a casual read, struck her as more practice than she'd expect from someone attempting this kind of scheme for the very first time under acute financial pressure. She said patterns this refined usually came from repetition, and she wanted to look into whether Callahan had any prior professional history worth examining more closely. Perpetua's investigation, extended over the following weeks to establish exactly how far the pattern went, uncovered something that widened the scope of what we were dealing with considerably beyond a single, isolated period of financial desperation following our father's death. She found, through her professional network within the state's funeral licensing community, that Callahan had briefly worked, nearly a decade earlier, before joining our father's business full-time, at a corporate-owned funeral home in a neighboring state, a position he'd left somewhat abruptly, according according to industry contacts Perpetua reached out to, under circumstances nobody at the time had fully understood or publicly discussed. Perpetua tracked down a former colleague from that earlier position, a woman named Faustina Okonkwo, who'd worked alongside Callahan at that corporate funeral home and had since moved into a regulatory compliance role herself, precisely the kind of career shift she told us candidly when Perpetua first reached her, that had been directly shaped by what she'd witnessed during her time working alongside Callahan. I always suspected something wasn't right with how he handled certain accounts, Faustina told me. Once Perpetua connected us, and I explained the full situation, her voice carrying the specific weight of something she'd apparently been waiting years for someone to actually ask her about. There were patterns in his billing that a few of us noticed at the time, families who ended up with considerably higher final invoices than their initial consultations would have suggested, documentation that seemed thinner than it should have been for some of the more complicated cases. Corporate management investigated informally at the time, found enough irregularity to quietly let him go, but framed his departure publicly as a mutual, amicable decision rather than anything that would follow him professionally. I've always wondered, honestly, whether that quiet handling just let him take the same pattern somewhere else. I asked her carefully, listening as closely to her wording as I had to Faustina's a moment earlier, whether the specific techniques Perpetua had identified in our own funeral home's records, the missing itemized disclosures, the bundled higher-cost merchandise, the discrepancies between billed services and actual arrangements, matched what she remembered noticing in Callahan's earlier work. She was quiet for a moment before answering. It's remarkably similar, she said. Different company, different specific numbers, but the same underlying method, exploiting exactly the moment when families are too exhausted and too emotionally overwhelmed to scrutinize an itemized bill line by line, and counting on that same exhaustion to keep them from ever complaining formally, even if something felt off to them afterward. Faustina agreed without hesitation to provide a formal statement describing what she remembered from that earlier position for use in our case, understanding, she said, that even though the corporate funeral home's internal handling of the matter years earlier had never become a matter of public record, her account might still matter in helping establish that this wasn't a single, uncharacteristic lapse, born purely of the specific financial pressure of taking over our father's business, but a demonstrated repeating pattern of professional behavior spanning at least a decade. I sat with that revelation for a long time after Faustina and I finished talking, turning over the specific, awful understanding that my own brother, someone I'd worked alongside my entire professional life, someone who'd spoken so movingly at our father's funeral about the values our father had instilled in both of us, had apparently been carrying this specific pattern of exploitation for years, before our father's death ever gave him the opportunity to apply it to the very business our father had spent 40 years building on the exact opposite principle. With Basil's forensic confirmation of the forged dissolution agreement, Perpetua's complete documentation of the funeral rule violations and apparent billing fraud, and Faustina's account of the strikingly similar pattern from nearly a decade earlier, Cordelia laid out a strategy involving several parallel tracks she explained carefully before we moved forward with any of them. The first was a civil claim to formally void the fraudulent dissolution agreement and restore the original joint partnership structure our father's will had established. The second was a formal complaint to the State Funeral Licensing Board, which had independent regulatory authority to investigate exactly the kind of pricing and disclosure violations Perpetua had documented, with the power to suspend or revoke Callahan's funeral director's license entirely if the violations were found sufficiently serious. The third, which Cordelia noted would likely follow naturally from the licensing board's own investigation, was a referral to the State Attorney General's Consumer Protection Division regarding the specific instances where families appeared to have been billed for services or merchandise they never actually received. This case has more moving pieces than most disputes I handle, because you're dealing with harm on two entirely separate levels, Cordelia told me. There's the harm to you personally, as a co-owner defrauded out of your rightful stake in a family business, and there's the harm to every single family who trusted a business with your father's name on it during the exact worst moment of their lives, only to be systematically overcharged and misled by someone who understood precisely how much less likely a grieving family is to scrutinize an itemized funeral bill closely. We filed the civil claim to void the fraudulent dissolution first, alongside a formal complaint to the State Funeral Licensing Board, attaching Perpetua's complete documentation. The licensing board's own investigation, once formally opened, moved faster than Cordelia had initially predicted, given, she said, how unusually thorough and well documented our initial complaint already was, compared to the vaguer, harder to substantiate complaints the board typically had to work with. Within 6 weeks, the board had conducted its own independent audit of the funeral home's billing practices, interviewing several of the families Perpetua had identified directly, and had scheduled a formal hearing to determine whether disciplinary action against Callahan's license was warranted. Callahan retained his own attorney almost immediately once the licensing board investigation began, and the resulting series of proceedings, spread across nearly 4 months, felt at times like an entirely different, more exhausting kind of grief than anything I'd experienced even in the immediate aftermath of our father's death, a slow, grinding process of watching my own brother's attorney attempt to minimize and reframe evidence that Perpetua's documentation and the board's own independent audit had assembled in exhaustive, unambiguous detail. Cordelia spent the evening before the formal licensing board hearing, walking me through what to expect. The same careful preparation I imagined she offered every client walking into a proceeding with a family member who'd betrayed them this thoroughly. She told me my role wasn't to relitigate a lifetime of working alongside my brother in front of the board, wasn't to make him feel the full weight of what he'd done in that specific room. It was simply to let the documentation speak, to be present and composed, while Basil's forensic report and Perpetua's billing analysis, and Faustina's corroborating account did the work I couldn't do as convincingly through raw emotion alone. I sat in the hallway outside the hearing room for nearly 20 minutes before it began, Cordelia beside me reviewing her notes one final time, and I found myself thinking, unexpectedly, about the many times I'd sat in that same building's parking lot as a teenager, waiting for our father to finish some licensing renewal appointment, never imagining I'd someday sit here again under circumstances this painful, waiting to testify against my own brother. The formal hearing happened in a modest conference room at the State Licensing Board's regional office, nearly 5 months after Odalie's first unsettling phone call. Callahan arrived with his attorney, and I hadn't seen him in person since our tense conversation months earlier, before any of this had fully come into focus. He looked, sitting across the room during that hearing, considerably older than I remembered, the particular toll of carrying a secret this large for the better part of a year, visible in ways that made some small, stubborn part of me feel a flicker of unwanted grief even amid everything else I was feeling in that moment. Perpetua presented her findings to the board methodically: the 14 documented instances of missing required price disclosures, the dozen cases of deliberately obscured bundled pricing, the 6 specific cases of apparent billing for services or merchandise never actually provided, and finally, delivered without particular emphasis, simply as one more piece of the growing record, Faustina's account of the strikingly similar pattern from Callahan's earlier employment nearly a decade before. I watched something shift in Callahan's expression at that final piece specifically, a flicker of genuine shock that told me he hadn't expected that older, quietly handled departure to ever resurface in a room concerning our father's business. It was Callahan himself, not his attorney, who finally spoke, in a voice that had lost almost all of the careful, measured composure he'd maintained through our earlier, tenser exchanges. He said he'd spent years watching our father's principled, modest pricing struggle against corporate competitors with none of the same ethical constraints, genuinely believing, in his own account, that the business's long-term survival required more aggressive pricing than our father had ever been willing to consider. He said that once our father died and he found himself in sole day-to-day operational control, some cornered, resentful part of him had convinced himself that finally implementing the pricing changes he'd always believed necessary, even without my consent, even through methods he understood weren't entirely honest, was simply saving the business rather than betraying its founding principles. I told myself I was protecting what Dad actually built by making it financially sustainable, he said, quieter now. I don't know anymore whether I actually believed that, or just needed to believe it to be able to look at myself while I was doing it to families who trusted us. He didn't address the earlier corporate position directly, didn't offer any explanation connecting the two situations beyond his visible shock at hearing it mentioned, and the board didn't press him on it during that specific hearing, though the board's chair noted, for the formal record, that the pattern evidence would be considered in reaching a final determination regardless. I opened that decision letter standing in the funeral home's own mailroom, the same small room where I used to help our father sort invoices as a teenager, and I read it twice through before the words fully registered, my hands not quite steady the entire time. The licensing board's formal decision came 3 weeks later, in writing, and it was more thorough than I'd let myself hope for going in. Callahan's funeral director's license was suspended for 18 months, with reinstatement conditioned on completing formal ethics and consumer protection compliance training, and submitting to independent audit of any funeral business he worked for during a subsequent probationary period. The board also formally referred the 6 specific cases of apparent billing fraud to the State Attorney General's Consumer Protection Division for separate investigation, a process that, Cordelia told me, would move on its own timeline entirely separate from our own civil dispute over the funeral home's ownership. The civil claim to void the fraudulent dissolution agreement resolved more quickly once the licensing board's findings became part of the public record, since Callahan's attorney, facing both a suspended license and a formal fraud referral, had little remaining leverage to continue disputing the underlying forgery. The settlement Cordelia negotiated restored the original joint partnership structure our father's will had established, required Callahan to formally step back from any operational role in the business during his license suspension, and established a court-supervised restitution fund seeded by Callahan's own remaining assets, specifically to reimburse the families identified in Perpetua's investigation for the difference between what they'd actually been charged and what proper, compliant pricing would have required. I took over full operational responsibility for the funeral home during Callahan's suspension, and the first thing I did before anything else was personally review every billing file from the 6 months in question, calling each affected family myself rather than delegating the difficult, uncomfortable work of acknowledging what had happened to them. Those calls were, without question, among the hardest conversations of my entire life, apologizing on behalf of a business bearing my father's own name for exactly the kind of exploitation he'd spent his whole career trying to make sure never happened under his roof. Several families cried on the phone, some out of relief at finally understanding what had felt wrong about their experience without being able to articulate it clearly at the time, some out of a fresh wave of grief for a business and a family name they'd trusted completely and felt genuinely betrayed by. One woman in particular, an elderly widow named Marguerite Alvarado, who'd lost her husband during the exact period in question and had been billed, Perpetua's analysis showed, for a casket upgrade she'd never actually agreed to, told me something during our call that I've carried with me since. She said she'd noticed the discrepancy at the time, had felt confused and vaguely uneasy about the final invoice, but had told herself she must simply be misremembering the details of a conversation she'd had while too exhausted and grief-stricken to think clearly. Exactly the specific vulnerability I understood listening to her, that Callahan had apparently learned to systematically exploit across an entire decade of practice. "I trusted your father's name on that building," she told me. "I want you to know I still do, once I understood what actually happened. I called the Okonkwo family myself, the same family whose consultation room account had stayed with me so vividly, and offered them a full refund of the difference between what they'd paid and what our restored compliant pricing would have actually charged." The son cried on the phone, told me he'd spent months quietly blaming himself for not questioning the bill more carefully at the time, and that hearing our family formally acknowledge what had actually happened, rather than simply letting the discrepancy sit unaddressed, mattered to him more than the refund itself. I rebuilt the business's pricing and disclosure practices from the ground up over the following months, working with Perpetua as a paid consultant rather than simply a witness in our legal case, implementing exactly the kind of rigorous, transparent compliance system that might have caught this pattern within weeks rather than letting it run for 6 months. Every family now receives the required itemized price list before any conversation about specific services begins. Every consultation is documented in detail sufficient to withstand exactly the kind of scrutiny our own case had required, and I instituted a policy, beyond what any regulation actually required, of a mandatory 48-hour period before any family could finalize a decision on higher-cost merchandise options, specifically to protect against the kind of pressured, exhausted decision-making Callahan had apparently learned to exploit so systematically. Faustina and I still exchange messages occasionally, a former stranger and me connected through an unsettling professional coincidence that neither of us had asked for, but that had, in its own strange way, helped stop a pattern that had apparently been running unaddressed for the better part of a decade. We've talked more than once about how differently our own two workplaces handled roughly the same kind of warning sign, one quietly protecting its reputation by letting a problem walk out the door unaddressed, the other, our own family's business, having no idea a problem even existed until a former employee's offhand comment happened to reach the right ears. She told me once that hearing our case resolve with a formal license suspension and fraud referral, consequences considerably more serious than the quiet, informal handling her own former employer had chosen years earlier, brought up complicated feelings she hadn't fully anticipated, relief that the pattern had finally been formally documented and addressed, alongside a fresh, sharp frustration at how much earlier this could have been stopped if her own employer had handled Callahan's departure with real accountability rather than quiet, reputation-protecting discretion. "I understand why they did it," she told me. "Nobody wants a scandal attached to their brand. But I've thought, more than once since we talked, about how many families in between his leaving us and starting at your father's business might have been spared if someone had just been willing to say, formally, in writing, exactly what we suspected at the time instead of letting him walk away with a clean reference." I asked her whether she'd ever consider formally reporting what she remembered to the state licensing board now, given that the current investigation was already underway, and additional corroborating history might strengthen the ongoing case against Callahan's professional standing. She told me she'd actually already reached out to Cordelia independently after our first conversation, offering to provide a formal statement for exactly that purpose, understanding that even though her own former employer's handling of the situation years ago couldn't be reopened or formally re-examined, her account might still matter to the current, active proceeding in ways that could protect future families from the same pattern repeating itself a third time somewhere else entirely. Marguerite Alvarado, the widow whose casket upgrade discrepancy had stayed with me so vividly, became, in a small but meaningful way, part of the business's rebuilding process herself. She agreed when I asked her cautiously whether she'd be willing to review our new disclosure forms and consultation procedures from a family's perspective rather than a funeral director's, offering feedback that proved more valuable than almost anything Perpetua's professional expertise alone could have provided. Since Marguerite understood, in a way none of the rest of us fully could, exactly what it felt like to sit across from a funeral director during the worst week of your life, trying to make careful decisions while barely able to think clearly at all. Callahan and I have spoken only once since the licensing board's decision, a brief, strained phone call several months later where he apologized again, more directly this time, without his attorney present to shape his language into something more legally careful. He He told me he'd moved to a different state entirely, was working in an unrelated field during his suspension. Uncertain, he said, whether he'd even attempt to return to funeral service once his 18 months were up, given how thoroughly the licensing board's public decision had already followed him professionally within the tight-knit regional industry community. He said he was seeing a therapist for the first time in his life, trying, in his own words, to understand how a person convinces himself, across nearly a decade and two entirely separate employers, that exploiting grieving families constitutes solving a business problem rather than recognizing it for exactly the harm it actually was the entire time. I didn't have much to say back to him in that call beyond acknowledging that I'd heard him, that I appreciated him at least attempting real accountability, rather than continuing to hide behind the vague, principled-sounding framing he'd offered during the licensing hearing. I don't know yet what our relationship will look like going forward, whether the family holidays and gatherings that used to naturally include both of us will ever find a way to include him again, or whether this particular fracture will simply remain permanent. One more loss layered on top of the original one that started everything. I think often about the specific afternoon our father waived that grieving young widow's bill, the quiet, unshowy way he decided that some kinds of profit weren't worth pursuing at the expense of what a business was actually supposed to mean to the people it served. I think about how easily this entire pattern could have gone permanently undetected if Odalie hadn't happened to hear an offhand comment at a community event, if she hadn't happened to remember our father's will clearly enough to know something didn't match, if I hadn't happened to have a friend with exactly the right consumer protection expertise to help me understand what I was actually looking at. I think about Marguerite Alvarado, trusting her own unease into silence for months because she assumed grief had simply clouded her memory, rather than trusting that something genuinely wrong had happened to her. I keep a folder now with Basil's forensic report, Perpetua's complete billing analysis, Faustina's statement, the licensing board's formal decision, and the civil settlement tucked into the same office where our father used to work late into the evening, the same office where he died with paperwork still spread across his desk. I don't open that folder often, but I want it there. The whole record for the day some future family director, faced with the same kind of financial pressure that apparently once tempted my own brother, needs proof that a business built on genuine care for grieving families isn't naive or unsustainable. It's simply harder and slower and considerably more worth protecting than whatever short-term profit someone might convince themselves justifies betraying it.